Okay. Here we go. Hope everybody had an awesome week, that you crushed your goals. Popping on here for our weekly rate update that we do on Friday going into the weekend, so you know exactly what to expect when it comes to your home loan rate going into the weekend when you're looking at those houses. We got a holiday weekend. Hope everybody has a happy and safe Labor Day. Enjoy the fruits of your labor. We get up, we go to work every day, we put those hours in, and now's our time to enjoy it. This is our holiday for us who are out there in the workforce, making ends meet, living the dream. So enjoy your Labor Day. Hopefully, you're able to go to the lake, maybe able to enjoy some time with family. Whatever you do, just hopefully it's a safe and happy holiday weekend for you. So my name is Ryan Lee. I have done this for a little while now, and I get a lot of feedback from my realtor partners, from other people who have subscribed, that they enjoy this. They enjoy the knowledge that it brings to the table whenever they're out looking at houses, to know what they're going to expect whenever they're putting their offers in, to see what they can get for their, for the home interest rate. So do this interest rate. Now, these are not rates that you can go to a bank, go to a credit union, and receive. These are rates that I get by making 50 of the most competitively priced banks compete. And I do this every Friday. I make them compete. I put an average borrower together. I get a borrower who has like a 700 credit score, looking for a house that's 250,000 on a 30-year fixed. And we go right down the line. We go conventional, FHA, VA, USDA, and we see what they offer. And by making banks compete, I'm a broker too. So if you're in Kansas and soon to be in other states, I'll be able to help you out. But when you make these banks compete, they get a little uncomfortable. And the bank being uncomfortable is a very, very good thing, because you're on the other side of the deal and you're very comfortable when the bank's uncomfortable. Because let me explain why. When you make the banks compete, they get hyper aggressive on their pricing. Now, banks set their own margins. So the margin is the difference between the cost it takes for them to do business and what they're going to make in profit over and above. Now, typically, they want to make as much margin as they can, because they got to pay CEOs, they got to pay vice presidents, they got to pay regional managers, branch managers, all this other fluff they got to pay. So if you make them compete, then we can shrink that margin, because they're going to be like, oh, well, we don't want the loan going to, Commerce Bank. We don't want the loan going to Wells Fargo. We want to get it. So we're going to bring that down a little bit so we can be competitive. And that's what I do on a macro, level. I make them compete, and they're going to cut that margin down so they can be very competitive. Because if you walk into a bank, if you walk into a credit union, if you call them up on the phone, they feel like they got you on the hook. They're going to give you whatever they feel like they can get away with, because chances are likely that you're not going to explore your options at that point. You're just going to go with them. The percentage of someone going with the first person who reaches out to them is very, very high. So if you're one of my viewers, if you're one of my subscribers, you're one of my watchers, you know that you need to shop around. If you're going to a bank, you're going to a credit union, you need to go to 3 of them and make them compete with each other. Hey, they're great people. Love them. I'm sure that they'd be great golf buddies. They'd be great to go hang out at events with. I see bankers, I see other loan officers all the time. Awesome people. There's some great companies, even in my hometown, that I compete with, but I have so much respect for, because they're amazing people. They get up every day very, very early, and they just bust their butts to try to help you out. With that said, those people are very few. And then there's also people out there who maybe work for larger institutions, banks, credit unions, other places like that. They got a guaranteed salary. So they're working for a huge company, and their whole goal is to make that company as much money as possible to fuel their salaries and to fuel their bosses' salaries, to fuel their shareholders, all this stuff. A local, small, independent broker or brokerage is where you want to be. And what we do is we actually, instead of going for you having to go bank to bank to bank and get your credit pulled each time, we shop around for you. Okay, we shop all these different banks and we make them compete with one credit pull. So Go talk to your local broker. If you're in Kansas, I can help you out. Soon to be in other states, I'd love to help you out. I will fight for you to get a lower rate. I will fight for you to get the cheapest fees possible. And that's my guarantee. So that's my spiel. Okay, I got right into it. I'm warming up and ready to go. Okay. So everybody have a happy, safe Labor Day. I'm trying to think of any other announcement. If you're a realtor out there and you watch these videos, if you are in Wichita, if you're in Kansas, I want to meet up with you. I want to go to coffee. I want to explain what I'm able to do. Average clear to close 14 days. Okay. Especially in Wichita, with as diluted as we are with these banks and these credit unions that have got away with BS for so long, putting people through the ringer, 30, 45, 60-day closes sometimes. No more. You don't have to put up with that. Get a hold of me, 316-744-5819. Let's schedule a coffee. Let's schedule a lunch. Let me tell you what it can look like if you just got to give me a try one time and you'll never look back. Okay. I know it's a little risky. It was a little risky. It was the hardest thing for me to make the jump to start a new business, but I took it and now it's been easy ever since. So give me one shot. You're never going to look back. We're going to fly together. We're going to get through these deals fast because that's what we need in this area. That's what we need in Kansas. That's what we need in the United States. We need speed to close. Speed solves everything. The longer that loan sits on somebody's desk, the more things that pop up because the underwriter's looking through it. He's looking through it, going through it with a fine tooth comb. Things are going to pop up. If we can get these things closed in 14 days, whatever, it's on to the next one, on to the next one, on to the next one. We want to get them done fast so things don't pop up. Okay. So that's my spiel again. But these rates, I'm going to be honest, they're ticking up. You know, Jerome Powell, the notorious old dude in the suit that we were always fighting against. They had a meeting in Jackson Hole, and he said a bunch of words about like, oh, look, U.S. consumers are going to have pain and pain and pain here, pain there, pain there. It made the markets go to crap. We did rebound a little bit later on in the week, but generally rates are about 0.75% higher than they were last week. So hey, Ando, I'm glad you're tuning in. It's always good to see you. But yeah, man, I've been on a little rant, haven't I? So let's get right to these rates. Conventional is at 5.875 with an APR of 6.149. FHA is at 5 with an APR of 6. VA is at 5 with an APR of 5.201. USDA is at 5 with an APR of 5.441. So last week conventional was at 5.5, FHA was at 4.625, VA is 4.625, and USDA is at 4.625. It's looking like the fours may be in the past. We are heading into the 5 ranges because my rates are hyper aggressive. I will tell you that. These are not rates that you can go into a credit union or a bank. I'm pretty sure a bank or credit union conventional is going to be up in the 6s. And I'm pretty sure that a bank or credit union on the Govy loans, that's what we call them, FHA, VA, USDA, are probably going to be in the mid 5s, maybe even up into the 6, depending on what your situation is. But make them cut down. If you're going to a bank, you're going to a credit union, go to 2 or 3, make them compete with each other. There's a little bit of room there. You can save you some money. Okay. Or just go to a broker. They'll do it all for you. It's the easiest route. But yeah, that's all I got. Rates, they're still historically low. And if you are an FHA borrower, now is your moment, because for the last 2 years, you've been getting screwed basically by these cash offers, by these conventional offers. Those guys are now kind of getting out of the market right now. They're kind of waiting on the sidelines, kind of seeing what things. First time home buyers, FHA, now's your moment. You always want to own rather than rent going into a recession. You just want to do it. You want to have something, because in recession, rents tend to increase pretty high, like 5%, 6% per year on average, where when we're going into a recession and you own a home, your your equity in that home, your what's the word I'm looking for? Your appreciation is also going to go up. So just keep that in mind. First time home buyers, don't rent, buy. If you want to know more about that, get a hold of me. I can send you an analysis to compare. But while we're going really long today, so I want to get off here. Be safe. Have a happy holiday weekend. I will talk to you guys next week. And I have something that I'm toying with to get that housing market update going. So hopefully Monday I'll have something in the works. So talk to you guys later. I got my little pointer. If you're a realtor out there, come on, let's go. Doesn't have to be hard. Get rid of the bank and the credit union's red tape. Let's go fly together. All right. Talk to you guys later.